investors are hoping for a bit of a Santa Claus rally to help propel markets into the new year, while President-elect Trump takes credit. He tweeted, quote, "The world was gloomy before I won. There was no hope. Now the market is up nearly 10% and Christmas spending is over $1 trillion. Here with his outlook is Potomac Wealth Advisors President Mark Avallone. Mark, good morning. Good to see you, sir.
Good to be here.
I appreciate everyone getting around so early this morning after Christmas, so thanks for being here. But you look at the markets, and it's hard not to attribute the rally that we've seen, the past month at least, to Donald Trump. Do you expect this Trump rally to continue into the new year?
Well, there were three factors that drove it higher, and the hopes of corporate tax reform is very beneficial to markets, reduced regulation, people want to see that, and an infrastructure spending bill that's been proposed or at least discussed. The problem is none of those have happened yet, and we don't really know what they're going to look like, and the markets run up. So at this point, we say we should pause just a little bit, see what's actually going to happen. We've had a significant run since the election and no real news, just a lot of hope. So we just think investors should pause from here and take a wait-and-see attitude and see how much of this agenda actually comes through.
Really? So you wouldn't encourage still buying at these levels? Steve Forbes, I want to get your take on this because it is the question everybody's asking. We've seen this run-up in stocks that's almost unbelievable, but as Trump points out, over 10% rally, and here we're starting the new year. He isn't even president yet. Should you be buying the stock market right now?
Well, markets always try to anticipate the future, and the idea of, say, cutting the corporate tax rate from 35%, which is the worst in the world, to 15%, which is just about the best except for Ireland, that automatically increases S&P 500 earnings, profits 20%.
So you don't think the market's overvalued right now?
Well, now, as Mark indicates, they have to deliver. Now, the one nice thing about regulations is you can wield the pen the way Obama did and repeal a lot of this stuff, starting with the Keystone Pipeline, XL Pipeline, saying if you want to build it, go ahead and build it. And if the Congress gets serious about knocking back these things, there's an act in Congress where they can do it by legislation, that would be great as well. So the key thing is following through. The other thing, though, the big thing is the Federal Reserve. The Federal Reserve has totally messed up the credit markets, especially for small and new businesses.
Yeah.
And so keep an eye on that. Who's going to go on the Fed? There are 2 vacancies. And I don't think Janet Yellen's going to get another term. She may not even complete this term.
Fair point. And also, in addition to all of that, we're watching bank stocks. They've surged since Trump's election, but has promised to scale back regulations, as both of you mentioned, especially for the financial sector, as the Wall Street Journal notes that could come with tougher limits on borrowing. Mark, what do you make of that?
Well, banks have had a great run. I was on the show about 2 months ago, and we liked U.S. financials, and I said so then. But look at what's happened. We've had almost parabolic moves up in the major money center banks. So again, I think we have to look at what valuations look like. We also have to look at the global banking system. The global economy is not nearly as strong as the U.S. The global banking system isn't as strong as the U.S. The news out of Italy is not good on Monte dei Paschi and the other major Italian banks. So before diving into the U.S. financials, at least the large cap multinational banks, I think we really need to look at valuations. Small cap banks far less impacted by those variables, but large multinationals need to have a close look at.
Well, and speaking of which, the ECB says that Italian bank you just mentioned, Monte dei Paschi, will need to raise $9.2 billion to plug a capital shortfall, which is higher than the $5 billion gap estimated by the bank. What impact could that have on the global financial sector and for banks here in the U.S.?
Well, we saw a much smaller banking crisis in Greece, or at least in terms of scale. Italy is much bigger. And this is the early stages of what is an unknown outcome. So that's why we say caution when we look at a global banking system and we see such major banks struggling in an economy that has zero growth. Europe has zero growth basically for the past few years without a prognosis for an upturn. So that's why we say caution, wait and see, look what develops. Markets have run up, and don't chase.
All right, got it. Caution, the word of the day. All right, Mark Avallone, thank you for joining us this morning.
My pleasure.